All right, what's up, everybody? I am doing an executive interview with Matt Clarke, the president of Churchill, one of our great clients here at Trust Engine. Matt, welcome to the Mortgage Coach community, brother.
Dave, it's always a pleasure. Looking forward to it.
Yeah, I can't remember the exact last time that we did something like this, but I think it was a couple years ago, Kristen and I did what we called a halftime report.
Yeah.
And we're thinking about doing that again this year, where we interview executives. It's not quite halftime, but this year is going quickly. And we talk about like, hey, how's this year playing out versus how we thought it was going to play out? You think that'd be a good idea?
I love it. This year is going quickly in many ways, but it's also going a little slowly, right? And so it's one of those interesting years where the time is passing by fast and we're just still continuing to drive to get to the point where we feel like momentum is really turning.
Right. So why don't you tell us how things are going at Churchill, and for anyone who doesn't know you or know Churchill, just give it a little bit of an overview of your role in Churchill and then how's things going for you?
Sure, real quick, President of Churchill. I've been with the company 22 years this year. And, we've been in business 33 years. And we're not a huge company. What we are nationwide, we do several billion dollars in volume a year. This year, as we looked at 2025, I was joking earlier at a panel I was speaking at the Tennessee Mortgage Bankers Association, talking about this very same thing. And I remember several years ago thinking, man, I just can't wait to get to next year. Then we got to the next year and it was, survive till 25, right? And now it's 25 and we're thinking, okay, this isn't quite the manna from heaven that people were hoping for a couple of years ago. But we've all adjusted our approach. We've all adjusted our expectations. We've all adjusted our strategies to the point where there's a lot of winning happening right now. It's just a little more difficult than most people wanted, but that's okay. It's good work. How we're doing, I think it's consistent with the industry. The way I see it, we're a couple of weeks behind where I projected we would be this year. Things started off okay in January and February. March was a little slower than we'd liked. April's starting to build momentum, and May seems like we've got some really good momentum building. So I'm pretty excited about the rest of the year. So, that's kind of how I hear everybody's doing. So we're no different.
So I don't think any of us had the recent acquisition and the growth, the moves that Rocket made on our bingo
Mm.
card for 25 that they would acquire Mr. Cooper and have 1 in 6 mortgages under management and acquire like literally within weeks of each other Redfin and have a purchase funnel. How big a deal do you think that is for the mortgage industry and for the local referral-based mortgage professional?
I think it's a huge deal for the public at large, right? It's great headlines. It's exciting. It's scary. But, an old saying we all know, control the controllables, control what you can control. And so for the local independent mortgage banker, it's a lot of noise. And in some ways, it's noise that you could use to your advantage. We talk a lot about the fact that nobody wants a mortgage. What they want is a solution to a problem. That problem being they don't either have the cash or want to use the cash to buy a home or an investment property. And so they need a real professional to come in and truly understand what they're trying to accomplish, the resources they have to accomplish that, what the problem is they're trying to solve, and come up with a creative structure to solve that problem. The days of the standard answer being a conventional, even a government loan, are behind us. Most of the great originators that I see winning right now are winning with deal structure, with how are we going to structure you to get this home? What are the various products available to you? And how do we deploy those products and strategies to help you win in a way that you're just not going to without professional counsel? So to wrap up your question, what's the implications of Rocket and Redfin and all of the things that they're doing? It's going to have some impact primarily on protecting our book of business. But at the end of the day, we're going to win based on what our capabilities are. And we have to every day show up, improving our capabilities, bringing more value, learning how to structure solutions to problems. And I think all that noise will continue to be noise. And the people that trust us to help them with their home and the finance of their home will continue to help in a big way.
What do you think the chances are that Zillow will become one of the top 10 lenders? I mean, right now they're one of the top 10 fastest growing lenders, but what do you think the chances in the next year or two that they'll be a top 10, they own a top 10 mortgage company through acquisition, or they will organically build a top 10 mortgage company over the next couple of years? What do you think the odds of that
I
are?
think there's a good chance that clearly their strategy and they have capital to do it and they have data. One of the things that independent mortgage bankers, one of the disadvantages is access to big data that these large companies with huge balance sheets have. But it doesn't mean we don't get access to it through other opportunities. I mean, Dave, not to make this a commercial for Trust Engine and what you do with your Mortgage Coach platform, but working with your organization gives us access to data in a consistent manner that allows us to execute like a large fintech without the investment that's required of a large fintech to aggregate that data. So I
Yeah,
think
no,
I think the smart independent mortgage bankers are leveraging those technologies that help them play big and small at the same time.
well, by the way, that is it. There's a phrase that I've been hearing a lot lately, which is, click to final payment homeownership platform. And clearly Rocket is building that. Zillow is building that. I mean, I think that term was actually created by Zillow possibly because they're getting that first click when people are shopping for homes and doing search. Our belief is that we need to anticipate the click. Like we even need to get to the consumer before they're clicking. Like, hey, you qualify to move up. You have all the data signals of someone who could benefit, who could grow wealth faster, or hey, you could save money by cash out refi or debt consolidation or whatever. So is that one of the reasons why you were one of the first to adopt our data solutions is so that you could get to the consumer earlier and faster?
Well, we've spent a fortune over the last 3 decades building a database of families that trusted us with their mortgage, and we want to keep those people as our friends. And the way we keep those people as our friends is that we engage with them in a personal way. And like you said, we're there before the click, right? If we're there before the curiosity of what can they do, helping them understand what they can do, we don't have to worry so much about them going out and clicking as they're out looking for homes on a Redfin or a Zillow. We don't have to worry as much about them doing a search online lender and where they can find the best rate because it's not the best rate they're after. It's the best solution for their family they're after, and they know they trust us to do that. But we have to be there first. And
Right.
that's where adopting Trust Engine really helps us.
Yeah. And then I think the other key element for a lender like you and for loan officers, speed to need, who can get there fastest, and then speed to clarity, who can communicate that, leveraging digital tools and teaching and training loan officers to help a consumer go from, oh, I have this need and I need to go from renting to owning fast. I need to go from, I know I love my 3% mortgage, but I should move up. I can move up. Speed to clarity. Any thoughts on that?
I'm so glad you said speed to clarity. Right. That's such a great way to put it. I know for me, I, I'm in the mortgage business. I consider myself reasonably intelligent and I understand the business fairly well. That said, whenever I do something related to real estate, I'm going to my trusted professionals and I'm asking advice. I'm getting clarity on what's possible, not just going online and finding what numbers may or may not look like, but I'm seeking professional counsel because I know there's a lot more to it than what you can digest on a screen. And so that speed to clarity is such an important concept. All of the families that trust us and all of the independent mortgage bankers out there need real clarity around what their solutions are, what their options are. And they probably need help processing a lot of that because there's a lot to decide in this decision. And I wouldn't want to do it without somebody professional guiding me through it. And I'm in
No,
the business.
no, right. No, I agree. And what percentage of loan officers, and I'm not asking this at Churchill, but just in your
Yeah.
assessment, have rocket proofed their business? Like, hey, they're using data strategically to anticipate needs, get to the need quick. They are delivering mortgage coach or some type of a experience that's creating speed to clarity. How much of our industry is really ready for this? And by the way, the biggest threat for most of the leaders on this, it is not Rocket, it is the Matt Clarks, and it is the people I interview on this YouTube channel that are upgrading. They are rocket proofing, future proofing their local loan officers. But what do you think? What percent is there yet right now? Like in your mind?
Probably 20%, if that. I mean, but I do think more and more people are getting it because they've had to. Over the last several years, for you to be doing well in this business, you've had to go out and actually perform at a high level relationally. You have to be super good at showing up with value, building relationships, and then once you get the relationship, proving your worth through the transactions that you engage and work through and execute on. And I think most of the loan officers who are doing really well right now have kind of mastered that, or at least are on their way. And a lot
Mhm.
of them have also layered on, okay, how do I be different in my marketplace? How can I present different? How can I show up different? How can I demonstrate that there's a competitive advantage if you partner with me versus somebody else? And so by necessity, I think that number is growing, but it's not nearly what it needs to be.
No, it's not nearly what it needs to be. So I'm gonna also I am preparing for the halftime report. Kristen and I are gonna publish something probably around the time of the gathering. I'm going to the Housing Wire gathering this year, and I'm pretty excited about it. It's going to be the second year where Clayton Collins and the Housing Wire group put real estate executives and mortgage executives under one roof, and I think it's never been more important to do that. So the other question I have, I'm going to be bringing back Moneyball Mortgage. My interview with Jim Deitch got a lot of impact in the marketplace. And this is another thing. Like you recently provided me an ROI report showing the loan officers that are using Mortgage Coach, which to me, those are the loan officers that are future proof. They're they're delivering experience at speed to clarity. They're using data to get to the need sooner. And what were the results on that? What was the
Yeah.
profitability difference?
So as you know, we've been studying this for a long time together. So thank you for helping me kind of put those analytics together. But what we found most recently in the most recent study is that our loan originators, our top tier originators that are mortgage coach users are 27 basis points more profitable than everybody else. They have 6 to 10 basis points fewer price exceptions, and they're doing 30% more volume on a regular basis than non-mortgage coach users.
All right, managers and leaders. That's right. You heard it from Matt Clarke. 27 basis points more gross margin, which is turning into about 2.1 in increased profits for the year, and about $1,040 per loan in more top line revenue. Like loans without a mortgage coach are less than $1,000 per loan in gross margin with mortgage coach. So this is the difference between profitability and not profitability. And here's the formula. Like you want to get loan officer adoption, you can't control interest rates, and you can't exactly control loan officers, but you know what you can do? You can measure it. You can have dashboards. You could be measuring credit report to funded loan. You could be measuring concessions, who's got the highest, who's got the lowest. You could be measuring gross margin, and we help you do that. That's built into our product where we are measuring what matters most, and we're even gamifying becoming a data-driven mortgage coach. Data. We need to be predictive with data. Like the tip to tail is being redefined. Like the tip is when someone has a need and you need to get to the need, speed to need as fast as you can with that consumer. You need to have AI. We're going to be doing a webinar coming up in a matter of weeks. I'll put a link down below to that. Make sure you come to that. We're going to be unveiling and talking about our new AI assistant built into Mortgage Coach so that the Mortgage Coach total cost analysis, now the consumer can use AI and interact with it. And then we're automating the Mortgage Coach next generation product is automating coaching. So literally using data, using AI, automating the Mortgage Coach for the loan officer, integrating it into your tech stack, your pricing engine, your LOS, your POS, your CRM. Everything needs to be integrated. And then our coach to coach program. So if you want to learn more about this, go to mortgagecoach.com, sign up for a strategy session, and we'll walk you through it. Or you could DM me, text me, email me. Would love to walk you through how we are helping lenders turn on the biggest lever to profitability they have. How can we, yes, we need to create new products. Yes, we need to have great secondary execution, but how loans are presented to the consumer matters more than ever. So let's get back to Matt.
And so when you layer those three things together, if you're a super user of Mortgage Coach versus a non-user or a middle tier user, you're producing more volume and you're producing it more profitably. Seems like a no-brainer.
Yeah, yeah, and another data stat that we do often, and Matt is pulling this together right now, is conversion, credit report to
Yeah.
funded loan. Now, I do think that's a big reason why you're seeing 30% more production from those
Yeah,
folks.
because we have a nice 10% increase in conversion rate from credit report to funded loan than for the ones who use Mortgage Coach than for the ones who don't. And I think
Yeah,
that's a Clarke issue.
and so my push to any executive listening to this, uh, again, I am Mr. Mortgage Coach, and I do believe that one, consumers are better served, like they will achieve financial freedom faster, more strategic, they'll be healthier. And I do believe at the same time we're making America better. We are helping consumers or we're helping loan officers make more money and have more fun. But the other, and I don't think I've ever asked you to run this number, but I did get this data from Homeowners Financial Group a couple years ago, and they looked at their retention. And if the loan officer or the loan officers that used Mortgage Coach, I think it was were like 250% less likely to leave. Like when they looked at their churn, it was most likely not a Mortgage Coach loan officer. Like so to me, the way I've reversed engineered that in my head is that if you're working for a company and you're using the tech stack, one, you're more successful, so you're less likely to leave, and you're reliant upon the company's tech stack. But I don't know. That's a pretty interesting stat for anyone.
Yeah, I need to study that. Off the top of my head, it makes total sense because they great loan originators are busy. They're working all day, they're doing their job, they're hustling. And they've got a good groove going. And if that good groove they have going and their process has the right tools embedded in it that help make them better and show up more effective, they're not thinking about who's going to pay them an extra, 10 basis points or 2 basis points, who's going to make them a bunch of promises. They're focused on how they're going to get out and leverage that for better relationships, for more business, for more relationships, for more retention of their past clients. And so their whole focus is different because they're already a professional.
Yeah. So let's close out on a couple questions around LO adoption. Uh, I do a lot of masterminding. I sell to mortgage
Yeah.
executives. I have meetings, and I constantly hear that LO adoption of sales and marketing technology is a problem. And so, as you know, we're working really hard to crack the code and get adoption at scale. But what if you've always had good adoption? I think depending on how we're measuring it, sometimes it's like, hey, Churchill has great adoption of
Yeah.
mortgage coaching technology, but what are you doing to get better adoption of technology right now?
I mean, the first thing you have to do is understand why people change behaviors, right? People change behaviors because two things are present. One, what's in it for me? Nobody's going to do anything unless they know there's something in it for them, whether they admit that or not. What's in it for me is the first question they're going to ask. And then two, proof beyond a reasonable doubt. Is there value in it for me? Is it something in it for me? And can I achieve that Is there proof that I can achieve that? So when we look at adoption, the first thing we have to show them is what's in it for me. And based on the stats I just told you about, a 30% difference in monthly production for Mortgage Coach users versus non-users. Who doesn't want a 30% increase in production? And proof beyond a reasonable doubt. We actually have the people that are using Mortgage Coach and how they're using Mortgage Coach, and we can show them the strategies and the deployment and walk them through how to do it. And that's one of the things, Dave, you've done so well over decades, is teach people not just here's a tool to use, but how to use it and how some of the best in the industry are using it, and make it so clear that they can get confident they can deploy it as well, so that they can achieve what they're trying to achieve, which is clearly an increase in production. And so to me, that's the key. What's in it for me? Proof beyond a reasonable doubt. And then a lot of people, unfortunately, need constant follow-up and motivation because they get busy and they kind of get their eye off the ball a little bit and drift where the wind blows of the week. And that we need to keep people focused on discipline activities consistently over time.
So, we recently are talking about rolling out our the coach program, which is really just leaders leading leaders. And I've seen a lot of success, shout out to Gillaire over at Prosperity Mortgage. I just interviewed her on how they're getting LO adoption. But I truly believe that to get change at scale for, distributed IMB retail, the change has to happen at the branch level. Like leaders like you need to lead them, but then we really need them to step up and lead. So let's try to get some of your branch managers to watch this. But
Yeah.
for the sake of this conversation, I'd love to have you as a president of a profitable IMB. What's your message to just branch managers as a whole? It's 2025. You know what's happening with Rocket. You know what's happening in the market. Like, what's your leadership? What's your leadership message to just all branch managers in this model?
Well, first, everything rises and falls based on leadership. We know that. That's a business principle, that's a sports principle, that's a family principle, and everything rises and falls based on leadership. The piece that I encourage people to have today is the courage to lead. The courage to lead. You're called to be a leader. Not everybody is going to just run and do what you say because you ask them to do it. That's being a legislator. Be a leader. Lead by example. Don't ask people to do stuff you're not also doing, but don't be afraid to hold your team to a higher standard and expectation, right? People get better most of the time because there was a leader in their life that caused that improvement and that development. People are silently begging to be led. It's your call to go do it. And don't be afraid to do it. And don't be afraid to shake some trees and break a few things along the way. That'll generate some activity, which will lead to some excitement, which will get a great team spirit going, which will generate momentum, which will lead to a win. But it's not
Yeah,
gonna if you're just a passive person tossing emails back and forth asking somebody to do something.
right on. I love that. I love that answer. So Matt, I mean, you've been deeply involved. Well, first of all, you've been in the mortgage for over 2 decades. You're involved in your local community. You do philanthropic efforts. I know you travel internationally to help others. You are a partner to First Home IQ. Churchill donates, I think it's $25,000 a year that you commit to First Home IQ. But I would love to know, how has this shaped your leadership style and the company's mission?
First Home IQ.
Yeah, just the deep commitment to philanthropic efforts, being, winning
Oh,
locally. You win locally.
one,
How's
one,
that shape?
one of, one of the things we operate by a set of core convictions, period. Right. We've got them personally, we have them corporately. Personally, my first core conviction is to serve others without exception. Second, be the hardest working person in the room. Third, be the expert. Fourth, leave people better for the encounter. Fifth, do the next right thing. Sixth, mornings matter. You got to take care of yourself so you can show up for others. All of that revolves around being your absolute best and showing up for others. Because the harder you work for others, the more gratifying and joyful and prosperous your life is going to be, regardless of how you define it. So if you want to win in business, help others. If you want to win in life, help others. And so I think when you talk about first home IQ and the endeavor there, I've got children. I've got children that have bought their first home, want to buy their first home, are terrified about it, don't know what to do, never were taught. I mean, there are people around this country who don't know anything about money and how it works. And it's tragic. And if we can show young people how to win with money and home ownership and real estate and providing for their family at a young age and grow them into something that is responsible financially so that they're also equipped to help others, the systemic impact is incalculable. And so that's kind of how I feel about that. I'm super passionate about that part.
Yeah, well, thank you for making that a priority at Churchill. And anyone listening to this right now, um, you know, it is a catastrophe. I mean, the average age of a first-time home buyer last year was 38. And for 2 decades, no, for 3 decades, in the 70s, at the lowest, it was 29 to like 31, 80s, 30 to 31. Even in the 2010s, it was 31 to 32. In the 2025, it's 38. Like literally since COVID, it's gone from the low 30s to 33 to 36 to 38. And we as mortgage professionals, we run enough credit reports. We talk to enough people that want to buy a home. And we have a database full of people and families that own homes and that want their kids to own homes. And the race for home ownership starts at 18. So we need to do a
Yeah.
better job of like educating families around home ownership. So I urge you guys check out First Home IQ. Churchill is a partner, a financial partner, and they not only commit money, but they turn their loan officers into these First Home IQ ambassadors. So check it out. I do think the mortgage industry can put a massive dent in financial literacy. So let's wrap it up, my brother. Are you reading any books that you want to recommend? Any closing thoughts for? There's going to be loan officers watching this. There's going to be CEOs watching this. Any books or closing thoughts?
Most of the books I read for pleasure are man trash, spy novels, secret agents, crime thrillers, and I would recommend that you do that. If you're one of those folks who are deep into self-study and diving into business books and trying to understand it, mix in some others to stretch that other part of your brain. It actually creates space for higher learning on the other things. The closing thoughts, I want to just one more point on the first home IQ. I was thinking about the affordability issue. A lot of what we were talking about in a conversation earlier today was affordability, and how it's becoming such a huge issue for families. Well, you combat that with education. Just because it's hard doesn't mean it's not possible, right? So you educate people early on to create the behaviors that put them in a position to buy a home, regardless of the affordability problem, because they've been prepared for it. And that's so much about life, is showing up prepared and ready to execute.
Love it, brother. Well, I am super grateful for you, Matt. Anyone watching this, guys, we can make a difference in the mortgage industry. We can create demand, and that will create profits. Make sure your loan officers are executing best practices with families. Go beyond the transaction. If you want to future-proof and you want to get more people into home ownership, you've got to show people beyond the transaction. I mean, that is how you win against Rocket Mortgage. That's how you win against Zillow, is your local, connected a personal way and coach people up. So if you have not subscribed to this YouTube channel, subscribe today. Make sure you follow savageinsights.com. I also have a mobile club. You'll see the phone number. It'll also be down below, like you're watching this on YouTube, the number. A couple times a week, I send out a text to loan officers, managers. I kind of consider myself like the industry's mortgage coach, where I'm like, hey, here's the homework assignment to upgrade. So subscribe to that Savage Insider Mobile Club. This is a wrap. Thank you, my brother. I appreciate it very much.
Thank
Take
you,
care,
Dave, and
everybody.
everyone listening.